Hi guys, welcome back to another video by KayaPlus. So today's topic will be revolving around our beloved Employees Provident Fund, or I should say Chun Bing's beloved EPF, because he's currently the one out of the both of us is contributing and utilizing or managing his EPF through the monthly deductions. So of course the EPF is slated to release its results soon, and of course the clamor and the news and was it the attention would be revolving how much would be the dividend yield this time around. We have already seen a few quarters of results. Later we touch base more in detail, and there's also a kind of range and prediction of what will the final dividend yield be for the last year's performance. So without further ado, I think we can just jump straight in to everyone's concern, or I would say anticipation.
Yes, so I think this is important. That's why we wanted to cover it right before the announcement. I think a few days later they will do the official announcement. But I think all in all, the whole sentiment about the announcement is quite positive. I think few days back or few weeks back, there's some coverage by the analyst saying the dividend will be between 5.5% to 6.5. Why this is important is because technically, if they hit within the range, it's already higher than 5.35% as a dividend yield, which is happening last year. So historically, this is the chart, or this is the number that the performance coming or extracted from EPF. And then, to be honest, the year before, which is 2022, wasn't a really good one. It only ended at 5.35. So anything above that will be a good news for any working person like me and you. That's why, because of this, I zoom into it a little bit details to find out what actually happens. So there's some public release result to talk about what is a 9-month performance compared against the past year. So especially if you look into this chart, this was released and published in The Age. You can see the one that's highlighted in blue, which is a 9-month performance. The investment income is already higher than the 9-month performance if compared with 2022. So in essence, for 2023 9-month, we already achieved about 47.86 billion. In comparison to 2022, it's about 33% increase, so which is quite impressive. And of course, based on this trend, technically you should end much higher compared to 2022 as a whole. Then we go into deeper to basically try to find out the breakdown. The reason why I wanted to do this is because we put our hard-earned money into this retirement fund managed by professionals, and then technically how they manage their fund can be a hint or can be some guidance for me and you to basically learn how to manage your asset. If you are not really actively doing investment, this can be a good reference. So you take a look at it, and then you can see from a breakdown perspective, EPF actually allocate a lot of asset into equity, and then they also have some asset allocation into fixed income instrument. But the rest is quite small. For example, money market instrument and also real estates. I won't cover that part. I want to zoom into the first two category, which I think is quite important because from the exact result, equity alone basically generate 9.17 billions from 3/4 of 2023. Even though from the asset allocation is just 42%, but then if counted from the percentage of income, they actually go up to 63%, meaning from a very layman term, you invest in equity, the return is higher than you invest in the rest. So I think this is quite an important message or importance of finding that we should basically look into it. Right. So what about you, Jupan? When you actually look into this information, what is your feelings? Do you think this 5.5 to 6.5% increase, is it logical? And what is the insight that you will see from all the news sources? Yeah.
I think just from a very layman, or very, if you step back and gauge and looking at the breakdown. So we would be quite aware that most of the public equities have rebounded ever since last year. So last year was 2023. Of course, there were some still effects from the COVID aftermath in some of the listed companies from 2021 carried over to 2022, and from 2022 and from 2023's EPF performance, they are actually sometimes looking back at what the companies that we invested in have reported for 2022. So from that, you can see that recovery has kicked in, and that is why even though a 42% allocation in terms of assets to equities, you can see that the returns generated, the alpha generated actually is much more compared to the other investment instruments stated. So, which also kind of echoes with what we believe in, which is if we are in this for the long term and we really want to compound our savings and earnings, the best way is really to go into equities. Yes, you are taking slightly a little bit higher risk, but at the end of the day, it's a kind of a risk and reward kind of playoff, right? So if you are taking, I would say, reasonable risk, and for the long run, if these companies continue to grow, and definitely you will see your earnings compound at a faster rate compared to bonds, which provides fixed returns, or even the money market instruments, which is just basically, very, very decent, but not exciting kind of use.
Yes, just to continue on about this, we talk about equity actually contributed the most compared to the other asset class. I actually go into deeper and try to find out some information, but because the 2023 full year result is not released yet, that's why the latest information that we can get is actually up to December 31st, 2022. So if you want to understand in terms of shareholding, that KWSP is actually having the ownership in the Malaysia counter, or the top 30 company or top 30 stocks in KLCI. So this is some of the big name that you can actually take a look. We'll do a quick flash through. If you're interested, you can feel free to pause the video to look into the details, or you can actually go to KWSP website to find out the details. So it's quite interesting. You can see some of the holding for RHB as of 2022 is actually holding up to 41% by KWSP. And you talk about, let's say, Axiata, you got about 16.88%, and so on. So this is how they actually give you a glance on, in Malaysian market, KWSP actually play a very big role in holding a lot of big stock like this. So if you go down to the list, you can see big name like Telekom Malaysia, Public Bank, Sun REITs, Sun Dhabi, Maybank, and so on. So this is just a quick reference for you to take a look. We are also trying to give you an impression that if you see this, you think KWSP only invest in Malaysia stock, but the answer is no. They also have equity in foreign markets. But again, from the published data, we are only able to get the details from the Malaysia parts, right? So this is some of the information to give you as a reference. And while we are excited into the upcoming announcement, but we also quite worrying after I look into the stats published by KWSP or EPF. The data is actually as of 2022, because when you look into the average saving or the median savings by a different age group, if you go into, let's say, 50 years old or 55 years old is the ideal age for you to retire, you can see the median savings is only about, let's say, 11,000 for 55 years old to 59 years old. I mean, by the time you're about to retire, let's say you don't have any personal saving, you're only able to get 11,000 from your EPF account. And let's say you live a very simple lifestyle, spend like 1,000 per month, it can't even last you for a year. So this is quite worrying. That's why we wanted to highlight this information. But of course, if you're listening and you have some planning financially, you should take this as a reference and try to plan your retirement as early as possible. Although as a whole, it's quite worrying, but then as individuals, you should basically calculate against your own expenses. We have a couple of videos that cover how to basically save enough for your retirement. We will put the link in the description for reference. But then in short, the overall number published by EPF is quite sad. Then we zoom into a little bit deeper. If you broken down by a different race group, the number is also differ quite a bit. And especially if you look into Bumi Putra, for the age below 55, Malays, their saving is only up to about 5,000, 5,500 for the median saving. I don't know what about you, Jupan, but for me, although I saw this figure before, and when I do some research, I saw this figure again. But every time I check out this number, I just feel very, very upset because I'm not sure as a nation how the government can afford to basically support people with so little retirement fund when they go into the age they're supposed to get to enjoy their life, the remaining of their life. Jupan, what do you think?
Yeah, I think the numbers is a little bit too low. I mean, EPF is one of the, I would say foolproof or risk-free way to compound your earnings into something that can fund your retirement. I mean, it shouldn't be able to fund 100% because I think that is why DIY investing or even unit trusts or even other types of investment comes to play. But it is there to offer you a cornerstone, a basic foundation, and you can build out other stuffs on top of it to somehow shape and fund your ideal retirement life. Right? It can be properties, it can be stocks, it can be a lot of it. But for 5,000, and as you said, if that one person just spends 1,000 ringgit a month, 5 months it's gone, it's empty, right? So, and I mean, it's okay if they have other avenues or other instruments outside of EPF to help. But the thing is, from understanding, how much you have in EPF somehow has a correlation with how much you have in reality, right? So someone with a good paying job will definitely have more contributions to the EPF, and they definitely, if they are also prudent, they'll also set aside some of their monthly pay to fund a property and get into other kind of investment. So everything somehow tallies. So when you see a low EPF number, it also tends to link to that. In outside of EPF, this person also might not have a good amount of investments outside of EPF to fund their retirement. And if that is true, which I think is, then it can be a little bit scary. We're talking about median, which means a lot of people, not just one people, have just 5,000 ringgit in their EPF account, but more than that. So, and it's a bit scary on how these individuals are going to fund their retirement life when they reach retirement age. So it's really something to think twice and thrice, and it could be a big problem, when the time comes.
I think overall, as an individual, we will strongly advise that plan the retirement as early as possible, especially if you want me to be a guy that spread a lot of negative energy. Maybe I can give you a few things that's coming into play. 1st of March, Malaysia will have some increase in service tax from 6% to 8%. For certain category, of course, your food still remain at 6%. So this one thing that's coming will technically increase some of the living costs. Then your diesel subsidy will be gone soon. Petrol subsidy will become targeted. The diesel one also become targeted, but then from an implementation standpoint, diesel will come first, petrol will come next. And all these things, there are more to come. If you don't plan accordingly and we only act when we are actually in trouble, like what a lot of Malaysians did back in the COVID time, that withdraw so many money from the EPF saving account. This is not going to help, because in long run, if everyone is doing the same thing, ultimately all this burden will be added on to your next generation. And then bear in mind, Malaysia is not a young population if, in comparison, let's say, to Indonesia. The young person is actually shrinking, and then of course the entire society is aging, actually going into an aging route. So people are getting older and older. So essentially, all these things that you don't think it makes sense for the government to do it may do it sometime, increase taxes, reduce the coverage for the medicals, all those stuff will come. Without all the knowledge of, without all the control that you can do against all the macro environment, what you can do is invest in yourself, plan your financial as early as possible, invest early. Otherwise, I mean, we don't know. It can be in a very big trouble when we get elder and elder. Yeah. Anything to add on before I sum up the videos?
Yeah, I don't think so. I think at the end of the day, it's, I think having the numbers out will actually give us a little bit of measurement or yardstick. Say you know how much you have in your EPF, and you look at the median and the average. We somehow know whether we are either below average, at the middle, or above. And of course, it also brings us a step back to also rethink whether we need to, double down on our investments outside of EPF to further beef up, so that we have sufficient, savings and earnings and investments that can fund us through our retirement life, right? I mean, most of us would have a targeted. I think most of us should have a targeted retirement life and age, and we work towards it, and not just leave everything up to chance and probability. Because who wants to work until they are the age of 70 or 80, right? At some point, I mean, if I go around and ask a random person down the street, given a chance, most, if not all, would say that if they have the kind of money and that can allow them to live comfortably forever, most will say, yeah, I wouldn't want to work. But that's why we try to find a balance, right? Find the target age that you want to retire and work towards it. And I think most of us would turn out fine. I think the worst case scenario is not having a plan. And then when you don't have time, and when you figure out that there's no plan in place, that's where it's like crying against spilled milk. So I think that's it. And if you have any questions or any topics that you want us to cover, ponder, or even analyze, let us know in the comment section. And yeah, hopefully the best outcome and the best results for this upcoming EPF results announcement with the desired dividend yield to Malaysians out there. Yeah, we'll see you in the next video. Give us a like, subscribe, and turn on the notification bell so that you can get notified when we post our next content. So see you in the next one. Take care. Bye bye.